Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Monday, November 4th, 2019. I'll keep this one brief. Was probably going to considering skipping a update because there's just absolutely no new technical developments in the broad markets and the major stock indices since the last update on Friday. With that being said, a member in the trading room had asked for an update, my thoughts on that. So, figured why not. But so let's just go over some of the levels to watch, because there's some things, again, it's not always about have there been developments. It does me no good, or you or anybody, for me to come out tomorrow or a week from now after a big move in the market and say, oh, here's why the market made that move. If nothing else, I loathe hindsight analysis. I'll only do it when there's a point to be made or something, point out something I missed. So let's look at the levels to watch in advance that might trigger the next actionable trade. But let me make it clear. As of now, we have 0 sell signals in the market. Going back a few weeks ago, I had mentioned here I had this blue line down low, and I said, we're getting close enough. Market's probably going to want to pop those highs. Any new high would be a divergent high. Same thing I've been saying for quite a while, and that's all it is right now so far. So we took out the previous highs by a marginal amount. Doesn't mean we can't go anymore. I think it's less than 2%. And again, I've covered that many times in recent months. Every new high, going back to this major top in early 2018, each of these new highs, every one I'm marking with an arrow, was a new high, record all-time high in the S&P 500. They were each marginally, meaning anywhere from less than 1% to no more than, I think, 2 or 3%. Maybe this one was 3% at most. I think it was less than 3. Each and every one followed by a correction, a sharp correction. So that has been the pattern. Hey, maybe it won't continue, but that's what technical analysis is all about. It's studying past market, patterns and behavior in the market to and predict future results. Now, I'm going to say this: I wouldn't expect a correction if we didn't have a lot of things in the chart. So number one, we still have the divergence, the same negative divergence that's been building that was a catalyst for this correction, and this one is still in place now. We have just simply another divergent high. Here's a trend line to watch. If you want to look at on the daily chart, replicate a trend line off the lows right here. That low from that is, where is that? I get that crosshair right on it. There it is. I think that's October 3rd. Draw a trend line up there. You can see it on SPY. I want to tighten that up right there. That's how it should look. A lot of reactions. And minimum target would be to back test that breakout around 302 or so. I'm going to get to the 60-minute charts in a second, give you levels. QQQ. Same story. There's that divergence line, like I said back here recently, that if we made a new high, popped above there, and we probably would. We got that close. There it is. We made it. Marginal new high. I can remove the question mark now because it did happen, and so there it is. There's your divergent high. No surprises there. Same thing. Each new high in the market in recent years in QQQ has been followed by a correction, and as of now you have a comparable trend line right here you can replicate to watch for a near-term sell signal on QQQ. Probably come in and back test at minimum this trend line here. Please remember that the charts are stacked, so there's certainly the potential for even a little correction to morph into something much more. When I say the charts are stacked, I'm saying that we have divergence all the way out from the 60-minute time frame to the daily I was just covering. The weekly time frame, you have negative divergence on there as well. And all the way out here to the longest that I'll look at. I don't pay attention. There's yearly charts you can look at where every candlestick is 1 year. This is a monthly chart, and you have it all the way out there. So you're still dancing above the primary trend lines. So these are your bull market trend lines, key 20-month EMA, things that I've covered in the past that need to go. And we're above those now, but again, because of the potential here, this shows that one seemingly innocuous correction, maybe that looks like I said, maybe looks like we're just going to pull back. Even if I was a bull, I'd say, yeah, let's have a breakout. It's nice to get a breakout. I missed a breakout, or I want to add on a buyback. So you start to see that, and that's where the buyer should step in. So what we'll watch for, I can't tell you when it's coming, but you want to watch, well, once you get a correction, each level where the buyer should step in, do they step in? And if they don't, then something is wrong, and that may be the start of something much more. Should mention there's a nice little doji stick there on QQQ, so we'll look for any move down tomorrow, especially gap down. You maybe put in an island cluster top there, but we'll see. We'll just take it one day at a time here. I'm going to talk to you in just a second about where the opportunities are to make money, because right now they're not in the broad market. It's moving higher, but these gains are so small. In fact, before I get to a few other things I want to cover on the broad market, let me just make mention to members that I've just wrapped up a video, just finished uploading. I'm going to publish it today after I get before you'll get that one before this video. 2 weeks ago, just over 2 weeks ago, on October 15th, I picked one of the best looking sectors. I was very bullish on this sector and still am. The drug manufacturers, specialty and generic drug manufacturers, so not big pharma. They might be going up, doesn't matter. This is where I saw one of the best stops, and again, the point is you can trade the stock market, which are the indexes, S&P 500, the Russell, the NASDAQ, or you can trade individual stocks. And right now, as I said, the stock market, the risk return is awful. The trend is up, it's bullish, but the upside appears very limited compared to the downside risk, and it's going up, it's grinding so slow. The VIX is at near its low end of its support range. I'm going to get to the VIX in a second. So what I look for, and this has been a common theme in recent weeks, I've been sharing trade ideas, a lot of trade ideas that have very little, if anything, to do with the major indexes. For example, in this, I did the update today. A few weeks ago, 2.5 weeks ago, a little over 2 weeks ago, I covered, I think it was about 37 stocks in this sector. Because there's not an ETF, had there been an ETF, I would have put that out, the official trade idea, not one that covers only these generic and specialty stocks. So I picked the 37 that stood out to me. Almost all of those are up, majority 10% or more. In fact, we have the video today covered some of the ones that stood out. Some are coming close to price targets. Others are just now breaking out. And we had ENDP. We've gained 40% on that one since I highlighted a couple weeks ago. FLXN up 27%. AKRX up 30%. LCI up 20%. OPTN, we've gained 40% so far in just over 2 weeks. MNK, we're up 80%. Since I highlighted in that video, and that's all after all those stocks had objective entries at the time or shortly after. And so the point is, trying to make money in the stock market right now via the stock market itself, the index, is like trying to squeeze water from a rock or blood from a stone. We've had some great trades on natural gas recently, coffee, crude oil, gold. We've been long and short, the precious metals. Things again that aren't tied into the S&P 500, the broad market. That's where I continue to focus my efforts and my trades. And so I'm going to do these videos for you guys because that's number one. That's what on the public YouTube channel. It's general market analysis. And now, with all that being said, don't fall asleep at the wheel. Yes, I'm saying the market's grinding higher. Yes, there are no sell signals at this time, not even close. But we could get some soon. I'm going to get to the 60-minute charts in just a second, try to zero in on some levels that might trigger the next trade. And I want to just recap some things that I've covered in recent videos here. And again, these are all making the case that despite the current uptrend, the risk reward is unfavorable for new long positions. If you're long the broad markets, the futures, whatever, the S&P 500, SPY, fine, trail it up, keep a stop in place, and ride the trend. There's nothing wrong with that. For new positions, again, to me, the risk reward is not favorable despite what seems like a resilient trend. I've gone over this chart. This is the VIX. We're looking at 2 years price history. Remember, we had the biggest drop since the Great Recession, since the bear market back in 2007 to 2009. The biggest correction in this market started right here, and that was in the early October. And that came from, as I've mentioned, I have a support zone right here. I've had this support zone. I've shared it many times in recent years. The VIX tends to trade, over periods of years. The support zone, the bottom end of the VIX changes, but this has been the low end of the range. And what I can say, and this is not subjective, this is factual, every single correction, we've only had a few in recent years, the big ones, all came from the VIX starting out this level. Like I said, the problem with the VIX hitting that level, sometimes volatility gets low and it stays low for a while. So it was a persistent low volatility that finally played out for the biggest drop you had in the stock market. Again, you're looking at the VIX, so the VIX was spiking. This was a December 24th low right there when the market bottomed, and then the VIX fell. And the next correction was back here. In fact, if you missed it last week, here, I'll put it up real quick. Let's just put up QQQ. I already have it there. All right, so you can see it very clearly now when I do this. Here is the major top right here in Qs. The S&P followed right there, and then boom, that was the biggest correction again since the last bear market over a decade ago. The next second biggest correction, at least the biggest one all year, we had right here. So the VIX came to this level, hit right here, hit the top of my support zone, actually came to the bottom of that support zone, and almost immediately you followed with a big correction, biggest one of the year so far. VIX then came back. As soon as it hit the support zone once again, the top of the support zone, boom, that's where your next correction came from. And so we're not there, but we're darn close. In other words, we're close enough that it could kick in now. But as I often say, just like overbought is not a reason to short, and oversold on a security is not a reason to go long. And the reason is because overbought can and often does become more overbought, meaning your RSI will move from 70 to 75 or 80, or overbought can stay overbought for days, weeks, usually not months, but usually for a period of time. And likewise, this low volatility back here, it stayed low for a while. So what I'm getting at is the last few were one and dones. You hit that level and the market corrected. So all I'm saying is be on the lookout now that volatility has become low. It's because market participants, as they always have, become complacent. After a rally, they think stocks are going to go up forever. It's called recency bias. They think that trend will continue, and so they stop buying puts and they stop shorting stocks. VIX is based on puts and calls. You got more people buying calls, getting bullish. The VIX is going to fall, and so that's where we're at. So that's number one. You also have. Let me get rid of that. That comparison. You also have, as I've highlighted recently, my low volume indicator firing for the markets as well. What we're looking at here is a chart, 2-year chart of SPY, and as I've covered in recent videos, what I like to use, and it changes over time, but I put up a 10-period exponential moving average, a blue line on volume. So the volume bars are there, they're hard to see, that they're not significant. Some people get focused on single-day volume spikes or drops in volume. To me, it's about the trend, and that's why I use an EMA. It's going to smooth out the trend, the aberrations, if you will. And so you can see, simply put, we've hit now, I have a red line at the threshold, and when we hit that threshold, as you can see, each and every time we've hit that threshold recently, the market has corrected. And again, these are the largest corrections right here of the year so far. 1, 2. And actually we came right about there, right there, so there's 3. That's a little smaller one, but it was worth noting. Here we hit that low volume. We stayed there for a while. We were persistently low, just like the VIX was low. Remember, I showed you the persistent low volatility readings on the VIX back then, and that's comparable. So we had the same thing here. Persistent low volatility, or volume I should say this time, leading up to the peak right here before the biggest drop again in over a decade. So trade as you will, but again, I'm showing you, and that's not just SPY, you had the same thing going on QQQ, same thing, we're at the extreme low volume. What this is saying, the market's trading at a new all-time high, but nobody's buying it. I'm speaking figuratively, not literally, obviously, but when you have a breakout to new highs and there's no follow-through, no buyers, that tells you that it's a whole supply dynamic thing. There aren't a lot of buyers waiting to buy at these levels, and so again, you can see what's happened when we've hit this red line before, and that's where we're at now. Okay, and finally, let's zero down to the 60-minute charts to try to get you an idea when might the next sell signal come. This chart's a mess, QQQ 60 minute. I haven't cleaned it up, so let me turn off all the annotations and just show you clearly. If you draw a trend line here off the lows from early October right there, there's your uptrend line. You need to see this go, and if you look at it this way, you have negative divergence right here, and so there's a very short-term trend line there, but you want to break this trend line. And where do we go? I would say coming into at least this level. That would be a minimum pullback target somewhere around there, 194, 195, pretty decent support, and that would represent a drop of about 3% or so. So that's a minimum pullback target from where we're at. Now what does that mean? Well, if we go higher, then now it's 4%. If you go 1% higher. If we go 2% higher, now I'm looking at a 5% drop. But that's where I think we're going, again, at minimum. But please remember that minimum targets can sometimes seem innocuous, a little breakdown on the 60-minute chart. Okay, we'll have a little pullback. Bulls want to buy there. But if we don't bounce where we should, quote unquote should, that's what I do to try to gauge the nature of a pullback. You know, if the markets start to correct, and we're headed down here, because I can say this: if I was longer term bullish on the market, and I was looking to buy a dip, the dip that I would be buying, and I'd be all over like white on rice, would be a pullback to about this level here, 194.66. You have a lot of reactions there, so that's where should we get a correction soon, the bulls should be buying, the buyers should be stepping in. However, if they don't, it tells me something's wrong. Where are all the buyers? You know, that's where they should be buying. Again, quote unquote should be. And if they're not, it means they've dried up. So then you have the next support zone down here. And if they step in there, great. So I'm giving you levels that if you are bullish, that's where I'd be buying. I can't tell you what to do. I'll tell you what I'm going to do, and I'm going to watch that action there. You know, again, I'm also an active trader. If I'm short NQ into that and I cover there, I'm in and out, I actively manage, but I'm talking bigger picture for most swing traders or long-term investors. Watch this. If that goes, watch this level. If that goes, now we're talking something more, and there's something wrong. That means the breakout to new highs failed, and it means, more importantly, we shift back out to these longer-term time frames. It means that this negative divergence that's been building now, for many, many months. We had negative divergence at this high, and it's not as if it didn't work. We had a healthy correction, but markets pushed on up, and what they did is they simply extended the existing divergences that were already in place, became even larger. And again, this shows through on this daily chart, but it also goes to the weekly chart. Divergence that's been building now since really on the weekly chart since early 2018. We had multi-year divergence here, and then you go to the monthly chart and we've had divergence building. You can see the same divergence. So the charts are what I call stacked. So a correction that might seem minor at first, if it keeps going from there and you start to break support levels, then it has the potential to trigger much more powerful longer-term sell signals on the weekly charts. Again, I don't want to spend a lot of time on the weeklies because we're comfortably above the primary trend lines that we need to take out and moving averages right now. So I'm not going to spend a lot of time there, but I just wanted to kind of zero in on a short-term stuff. And again, that would be this trend line here on QQQ, and then SPY. If I can type, you have something similar there. Sport has a lot of lines. There's a comparable trend line on SPY to watch. I'd tighten it up like that, and you can see divergence there as well on SPY. So we're potentially close, but like I say, support is support until unless broken, and that would be a minimum target on SPY right there, about 302.50 or so, down to maybe about right here. Give it a little room if it undercuts 301. Again, this is where buyers should step in. This is kind of what that chart would indicate, this wedge, breakout to new high, back test. That would be a good scenario for the bulls if the buyers stepped in here and started to bid the market up on a little more volume. However, I'm leaning towards a break there and continue down. Let's look at the futures and we'll wrap it up for you guys. All right, ES. The S&P 500 E-mini futures. I'm going to zoom back out a little bit. I know this chart's a little busy, but I'm going to highlight the salient levels here. So you have right here, you have divergence that's been building now almost since the beginning of October, almost all month right there, at least first, early second week of October, and that's the divergences. So you also have, I've added a line here. I need to extend that line right there. If I can grab it, there we go. So I'm going to highlight it for you again. So we have the makings, or what appears to be a price channel right here on SPY, or ES I should say, ES. Let's watch this. And this little blip right here is what I call a channel or a wedge overthrow, depending on how you want to look at it. There's a potential uptrend line here that forms a wedge right here off this low, and we've overshot that in the channel. And so when you have a channel or a wedge overthrow, what usually happens and what you want to be on the lookout for is a move back down within the channel. And if you get that, it's usually a swift move back to the bottom and then quite often through the channel. So we're going to watch this price channel. That would give you a pullback. I think that's about a 3% drop. And if you remember last week, the big level I was watching, and it still has yet to be taken out, this is where a sell signal would be triggered, is the 30-20-ish level, about 30-20, 30-22. This is also a level like I just showed you on SPY where the buyers quote unquote should be stepping in. And so this, I can just tell you without mixing words, is my minimum pullback target. So if we go a little higher, maybe the technicals change, but as of now, look for a break really back, not much below today's lows. I think would do the trick and trigger that pullback there. And that would constitute a drop of about 1.65% from where we're at right now. And your first target would be this trend line right here at the bottom of the channel, but I think it would carry down through to that 30-22 level. That was the level I was on watch for last week and still am for a sell signal. So I think it looks something like this, guys. Come down there about 30-22, 30-20 on ES, have a reaction, a bounce, and then continue on down here to 29.79. That's my near-term target if we can start to get some downside soon. So again, reaction there if you want to game it like that. Anything much more than that, and that's a bad sign. You can see another potential support down here about 29.45. I think that's a big level as well. So I lay these all out in advance because things can happen quick in the market, especially when sentiment reaches those extreme levels and everybody is of the mindset, oh, there's no risk involved, so they don't have that put protection involved. And the shorts have given up usually when sentiment's that high. And so what happens, that paves a way for your quick reversals that come out of, people think it comes out of nowhere, but there's a reason for that. Because when you don't have a lot of shorts in the market, they're not there to cover and take profits on those drops, whereas all along here they are. And when you don't have the put protection, people start scrambling for that, and that puts pressure on the downside as well. So again, there's your targets, potential all the way down here to 29.45. Right now, let's just give you my preferred scenario over the next let's say week or so here, something along these lines right there. We'll have to assess it if and when it comes and see what it looks like, whether to cover here, here, or hold on for more. And then NQ, which is of course my preferred trading proxy. NQ, it's not the chart I wanted. Yeah, this one's cleaner, I should say. Still has a lot of lines on here, but you can see a nice rising wedge pattern, 60-minute chart. You have this uptrend line to watch right here. You have a wedge type pattern. You can see divergence right here at the highs, that negative divergence. And so what we need to see is a break of the trend line. Remember last week I said 80-40 had to go. We have a gap right here from Sunday before last on the futures, and that's pretty good support. We came and tested a couple times, so my sell signal never triggered last week. At this point now you have two. Last week I said we needed to see a break of the trend line and 80-40. We never got that. We held support. But at this point, if we break the trend line, that will give you your first sell signal, and there's enough meat on the bone, I believe. Depends where it breaks. But if it went down and let's say overnight and then broke tomorrow or later tonight, that's about 1.25, 1.25 point drop in NQ, which is plenty profitable. If you trade NQ, I don't have to tell you that. You make 1.25% on NQ, you made easily well over $1,000 per contract. So then my scenario would have, and I do have it playing out soon. These divergences I believe will play out. Maybe we make another high and the divergences extend. You can see, doesn't matter to me. Because any new high soon will just be another divergent high. However, divergence isn't a sell signal. So like I said, you need that sell signal to come. If it comes soon, where do we go? I think we play out something like this. Break down there, hit that 80, 50, 80, 40-ish level, have a reaction and come on down here to at least 79, 78. So that would be my preferred scenario near term. If we get some reversal in the market soon, anything much more than that we'll have to watch. I have a big level all the way down here about 77.92. But if we get down much below this is the recent breakout right here in NQ, and that will constitute a failed breakout, aka bull trap. So that's why, as I said earlier, this is the level where the bulls, quote unquote, should be stepping in. They should be stepping in here or here and buying to get the market if the market's going the next leg up. If the buyers don't step in this range, it just tells me there are not a lot of buyers on the sidelines. The buying has dried up, and the markets are all about supply and demand dynamics. Excuse me, I always tongue twist on that. So right now the market's drifting up, so you can say yes, the demand is strong, but guess what? The volume tells us otherwise. It's going up more from a lack of selling because there is hardly any volume. We've hit those extreme lows right now, and there's a lot of sentiment, and that clears the way for your quick moves down. So I've just spent a lot of time talking about a market where I let out on the video telling you there's no new significant developments. But again, trading is about being proactive, or at least reactive quick enough to act on it, because if you wait till 3-4% drop and then you start to get all charged up on the bearish side, you might have missed the move. Again, because we may be looking at just another pullback. The market may want to run up and make a new high again, or we may not even get a sell signal this week. We'll see. But I've laid out some levels to watch, and I will just go from there. And then again, remember, the easy money right now has been anywhere but the stock market. The stock market's in a near-term uptrend. It's going up. But again, I've just rattled off a half dozen names, and there are quite a few more in there that have done in 2 weeks, have done what the market hasn't made in over 2 years or more. So that's where I'll continue to focus my efforts and my trades on things that again have a better risk-reward profile. And right now, the stock market, the risk-reward profile is more attractive to the short side, in my opinion. We just don't have any sell signals to justify a strong position there. But maybe soon, so we'll keep an eye on it. Okay, guys, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.